Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific developments. In the US, the S&P 500 and Dow Jones Industrial Average recorded positive weekly gains, supported by lower US bond yields after weak non-farm payroll data and easing US retail inflation boosted expectations of a US Fed rate cut. Nasdaq Composite, however, recorded a decline after investors sold technology-related stocks. European equities trended mixed, with UK and French equities declining during the week due to political uncertainty. Asian equities trended higher, led by Hong Kong equities, which rallied over 5%, followed by Philippines, China, and Taiwan equities, each recording a 3% gain, while Korean equities fell 1%. Foreign investors net bought Asian equities, led by China A shares, with a positive inflow of $2.2 billion for the week after 4 consecutive weeks of outflows. Back home, Indian equities rallied for the 6th consecutive week. The Nifty index rose to a new all-time high, up 0.7% for the week, supported by positive global sentiments, strong industrial production data, and a strong earnings performance by a tech major during the week. Broader markets underperformed the Nifty index, with the BSE Mid-Cap Index up 0.2%, while BSE Small-Cap Index was down 0.3% for the week. Among sectors, IT and FMCG led the winners with gains of over 3.3%, while metal and realty led the losers with cuts of over 2.2% for the week. The Indian fixed income market had another decent week, with Indian government bond yields falling mainly at the shorter end of the curve ahead of the domestic inflation data, supported by falling US bond yields amid easing US retail inflation data. The 10-year Indian government bond yield remained unchanged at 6.99%, while the 3-year and 5-year government bond yields fell 3 basis points and 1 basis points respectively. The INR depreciated against the USD to close at 83.52 per dollar, as the impact of falling crude oil prices, lower US bond yields, and weaker US dollar were dominated by strong US dollar demand from banks and domestic importers. Brent crude oil fell 2.5% over the past week to close at $85.4 per barrel, on lower than expected impact of Hurricane Beryl on oil-producing refineries in the US and easing geopolitical tensions. Coming to macro updates for the week, the first was on India's CPI, or Consumer Price Inflation, which rose to 5.08% in the month of June 2024, higher than 4.7% recorded in the month of May and market expectations of 4.8%. This was also the fastest increase since February of 2024. The surge was driven primarily by acceleration in food prices, which grew almost 9.4% compared to 8.7% in the previous month, as higher energy prices and uncertain weather conditions lifted costs for keeping crops. Prices also rose for housing and fell at a slower pace for fuel and light. On a monthly basis, Indian consumer prices jumped by nearly 1.3%, the highest in past 11 months. The second data was on India's industrial production, which rose by 5.9% year-on-year in the month of May 2024. This was above market expectations of 4.9% and a 5% growth recorded in the previous month. Manufacturing output, which accounts for nearly 78% of the total industrial production, rose by 4.6%, with growth recorded for manufacturing of pharmaceuticals, medicinal, chemical and botanical products, and basic metals. Moreover, output was also higher for mining and electricity. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.